The one today, just now. Yeah, sure. So. If we just look at M15, big SMT from yesterday, yeah. We can see price broke structure, pulled back, broke structure, pulled back, and then broke structure again here during London. Then on M5, yes, you can see that, yeah. So the whole idea was based off because of the larger time frame on the larger SMT. Let me just see if I got stopped out on that. Yep. Okay. So look what happened. We had a breaker structure up, right? It happened during timing, London Open, right? So we know that when that breaker structure happened, this is just solidifying more liquidity below, right? And then what I did is I was watching price, and as soon as I saw this speed and momentum up, this is what gets the buyers, these guys, excited because they see speed away from the entry, right? Boom, 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 boom. As soon, remember this, yeah? I don't know if you can remember, I hope you do. The most important thing about the entry model 2, about selling or buying into the SMT, is watch as soon as the breaker structure happens, if we get a breaker, an engulfing candle back down, or vector candles, right? Remember, the pattern is exactly the same, right? In this scenario, we would wait for a bearish engulfing or vector candles, and then either a real breaker structure or an internal breaker structure, which is what happened, right? Look, we can clearly see here, we've had a bearish engulfing candle with a little pullback, and then boom, straight away internal breaker structure away. Then we started to chop around a little bit. We had some equal lows here, and then again, internal fake breaker structure up, price tanked lower. So what I actually did, I actually entered quite early here when I saw, when was it? Let me just double check exactly where it was. 61.5. 61.5. So basically, as soon as I saw this candle close here, I actually entered, but my stop loss was actually above there, and I was already targeting this, but I was doing frigging yoga, and what happened was it started to kind of go into profit here with this little wick, and then it started to push up, and then the 10 o'clock candle opened, and it started to go sideways a bit, and I thought, right, I'm doing yoga, fuck this. I just got out of break even. So I got out of break even, and then what price did is did a little internal fake breaker structure, and then hit TP. So I was looking at it thinking, okay, well, if I literally just put the trade on and thought, right, leave it, let me just carry on doing yoga, TP would have hit nicely, so that would have been beautiful. But then what happened, look, is the exact same thing happened again, but on the smaller time frame, right? Let me just make this a bit smaller. Look, price came into the SMT again, broke internal structure again. As soon as it did that, look what happened. Exactly the same pattern. What do we have here? Bearish engulfing. Yeah, but look, this is the pattern basically. As soon as you have that breaker structure away, which excites them because they're like, oh my god, it's breaking structure back up again. Okay, cool, I can maybe put my stop loss from, or maybe they re-entered. Some people maybe had their stop loss below here and they got stopped out. And then they had their breaker structure back up again and they thought, right, I'm going to get in again. I'm going to put my stop loss here. Hopefully this is the one. And what it does is it breaks structure up for them. A couple of minutes later, bearish engulfing. As soon as I saw this, I was like, right, why in the world would it be doing that when it's done a fake breaker structure up? When it's done a fake breaker structure up. Fake breaker structure up is usually the enticement, right? It's enticing people to go one way when it's actually going the opposite way. That's why it's called the fake break. So as soon as it did that, so that a bearish engulfing, I thought, right, the bearish engulfing printed beautifully, stop loss right above, and the target the lower the SMT. right? I didn't even I didn't even target the low of the SMT. I actually targeted somewhere around here. I think it's like a 1 to 2.5 or something like that. But I didn't take profit there. I actually just let it run because I extended it, and I think I just got out somewhere wherever the balance is, 4.336. So 3.6. I got there, just shy of 1 to 3. Yeah, but what I should have done is I should have targeted here, the lows, and if I didn't take profit manually, that shit would have just come back to break even now. So with gold, it's a tip: babysit it, because if you don't, it can just wick you out, stop you out, do that, blah blah, and yeah. So that's that. But yeah, ideally, look, you can call that TP being hit really, because it literally came all the way to the bottom, and it would have been nice. That would have been a nice 4.4. And look at the speed. As soon as the bearish engulfing printed, it literally follow through candle. This was the 1 o'clock candle open, pushed up, created the top wick, mitigated the bearish engulfing, and the next candle, boom, TP hit. So yeah, so this is why we always want to look at the M15 and look at the overall picture. The good thing is, because the market opened and it gapped, right? It gapped, it pushed up, it pulled back, it pushed up, it pulled back, it pushed up, it pulled back. Great, now we've got a demand that's been respected. You see how here, this was never mitigated? Right? I mean, you could do that, but even still, even if you covered that wick high in there, it still wasn't tapped. Do you know why? Because this was an inducement. Inducement low. This is the one I entered on Monday. And then look, price took, make a new high. Right? Look, you can see the beautiful 5-minute bullish engulfing here. Look at that. Boom, 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 boom. Another bullish engulfing continuation. Cool. Right? And what happened was, the reason why price didn't need to go and like tap into any, sorry, my bad. The reason why price never needed to go from here to here anywhere is because price was getting trapped here. Fake breaker structure, continuation. See that? So the fake breaker structure lower, we broke structure higher, and now we've pulled back to mitigate. So now we've got a demand, which is clearly broken structure, pulled back, and broken structure away from it. Excellent. There's clear liquidity. This is like the easiest basic price action to notice, and you'd be like, yo, this is clear basic liquidity that's getting trapped, right? And then we peaked at the high. We can't say, oh yeah, this took this to the left, because we don't know, because it's just too far away. So we go off current day's price. What does current day's price do? Boom, break structure, pull back, break structure, fake breaker structure up, reaction, right? So think about it logically. Where's liquidity now? Is it above or is it below? Yeah, because there's no liquidity above. It's clear. Like, look, there's that's the first breakout, right? After a massive uptrend. So most people are not getting in on this. Then we have another one, another breakout there. That's confirmed. So second breakout, excellent. What a coincidence that price induces the second breakout with a fake breaker structure and doesn't come up here, because the first one doesn't matter, the second one does, right? So there you go, look, exact same thing. And then when you put the pieces together, we have liquidity below, we have breaker structure away, we have a fake breaker structure during London Open with speed and momentum, and the bearish engulfing candle, which reacts, breaks internal structure, then it has another internal fake breaker structure here, and then sells off into the SMT again.